What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to talk about the Great War of Brokers 2018. Check it out. All right, guys, so we're going to go ahead and jump right on into this. As we do, do me that favor. You know what it is. Do me that quick favor. Smash the like button for me and subscribe to the channel if you haven't. What I'm going to do here is I'm going to read this report for you, okay? This article, which is just about a paragraph, and then I'm going to go into extreme details about what I'm extremely concerned with concerning, wow, that's a lot of concerns, regarding this zero commission charge by all the big brokers, okay? So let's jump right on into this. E-Trade joins Schwab, TD Ameritrade in eliminating commissions on trades. E-Trade Financial Corporation on Wednesday said it would eliminate retail commissions for online traders of U.S. listed stocks, options, and exchange traded funds. The move comes after online brokerage rivals Charles Schwab Corp. on Tuesday dropped commissions on U.S. stock, ETF, and options, a move that was followed by TD Ameritrade. E-Trade said it would also reduce its option contract charges to 65 cents per contract for all traders while maintaining its active trader pricing at 50 cents per trade contract. The changes will take effect October 7th, the company said. It's estimated the impact of the commission changes on the second quarter operating results would have been around $75 million. Shares of online brokers have sold off sharply since the Schwab move. E-Trade shares are down 19.4% over the last two sessions, while Ameritrade has fallen 28.2% and Schwab has retraced 12.7% over the same stretch. So that's what's going on, and that's why you've seen many of the broker stocks themselves take a little bit of nosedive since yesterday. Schwab was the first one to announce it, followed by TD Ameritrade today, and now today in the evening, E-Trade has announced they will be having $0 commissions on trades. This is funny to me because I just negotiated my E-Trade commissions down again, right? I negotiated them about a year ago, and I dropped them back down again yesterday. Yesterday, as a matter of fact. No, sorry, Monday is when they notified me they had given me the cheaper commissions I was seeking. So now it's $0. That was a wasted effort. Regardless of any of that, I'll still have to pay 50 cents, per contract when I do my options. But other than that, it seems after the 7th or on the 7th, actually, no fees for me. I mean, honestly, you should just engage that right now because, hey, tomorrow is a trading day and tomorrow is the 3rd. Whatever. Guys, this is awesome, right? And it all starts and stems from Robinhood, when they launched zero, trading fees. And they felt the pressure. All these guys felt the pressures. They've been dropping commissions and competing with each other for years now. But they felt the pressure when Robinhood came out, that simple app. But this caused all this. But I have a concern. We all know Robinhood sells order flow. This, I believe, messes with just the way the trades work themselves out, right? High frequency traders are now seeing all this order flow. They know where you're in. They know where you're trying to get out. All of this is visible. If everyone's selling their order flows now to compensate for this, which no one has said that's what's happening, I'm afraid it's going to mess with trading. I'm also concerned with trade executions. We all know TD, E-Trade, Schwab, they don't have the best executions, not even E-Trade, comparable to some of the other smaller brokerages that cater to day traders like us. So, it's like we know, if it's free or if it sounds too good to be true, it probably is, right? Generally, free stuff isn't usually the best quality. Doesn't mean that that's the case always. It just means that usually it's not the best. So I'm concerned. I'm concerned with what are they going to do? Are they going to sell our order flow so that they can compensate for these losses? Mind you, these losses, while they sound like huge numbers, they aren't huge in the grand scheme of things for most of these online brokerages, right? This is just a fraction of their revenue stream. They make money much like banks make money by having our money in their accounts, okay, and all their other revenue streams. So it's not like this is going to hinder them tremendously, even though they are going to take a little bit of a paper cut here when you factor in everything that's going on within their revenue streams. However, no one likes to take a pay cut. You find a way to figure out how to make up the difference. How are they going to make up the difference? E-Trade, how are you going to make up the difference? We want to know, right? We want to know what you're going to do. What are you going to sell our order flow? Is your execution on our orders going to remain the same, get better, or get worse? We really want to know these answers. I tweeted out, and it's funny, they answer everything usually when you tweet, but this hasn't been answered. I asked about trade executions and I asked about order flow. Nothing has been answered yet. So I don't know, guys. What do you think is going to happen here? What do you think? Are they going to sell our order flow like Robinhood would sells order flow? How do you think it's going to work out with trade executions? I'm skeptical, and I'll be skeptical until this has been implemented and going on for at least a few months. I won't draw any conclusions. I'm not making any claims. I'm asking questions, and I am concerned about it. We'll see what happens in a few months. October 7th is when E-Trade kicks in, and we'll report back and see what's going on. Let me know your thoughts on the entire subject. Drop it in the comment section below. Remember to subscribe to the channel if you haven't. Smash that like button for me, and I'll catch you on the next one.